Hey guys, short video on the crypto market. Found this beautiful chart here somebody made of the Trololo chart or the trend line or the logarithmic regression of the total crypto market cap. What I like about this one, in contrast to mine, is that the lower band hits all cycles. That's because he made it better in the beginning. My trend line is lower, and so my trend line it's not really fitting very well. This one fits better. Um, and 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 then you can also clearly see what's the problem today in this bear market and early bull market. There's one piece or one act missing in the crypto market, and that is that we are grinding higher on the lower band as we did in all previous, which is only two previous cycles. But okay, that's the info we have. In the two previous cycles, there was undervaluation to the trend line, the red line, for quite some time. And it's not just hitting it and then going away from it quickly. No, it's hitting it and staying around it for here half a year and here 1 year. So that's why I have said very often, and well, been wrong, because for example, I said that here also, that it's more likely that we will go back to the green line than that we go up to the red line. But that didn't happen. We did indeed, the past 2 months since I made my last Trololo video, instead of going down back to the green line, we went up to the red line now. So now we're at fair valuation. So if you still don't have crypto exposure, yes, you can still do it. We're at fair valuation, actually with a little bit overvaluation. With my data, the Trollo trend line is now at 450 billion or so. The market cap is at 530 billion. So we're about 20% overvalued. 2 months ago, we were at 340 billion. So a lot lower. 200 billion we went up the past month, a lot. Past 2 months. We almost doubled actually. But 2 months ago, we were at 20% undervaluation, now at 20% overvaluation. But okay, I mean, with crypto, you never know. It can indeed shoot away from you because, well, the total market cap is so low. 500 billion is nothing compared to the gold market. Well, that's 8 trillion, so that's like 16 times higher. No, that's actually 10 trillion or 12 trillion. So that's like 20, 30 times higher, the just gold. But of course, you don't have to compare with gold. You have to compare with all currencies in circulation, because that's what you're competing with here with cryptocurrency. And if you look at all currencies, fiat currencies included, it's not 8 or 10 trillion. It's like 100 trillion all fiat currencies. So we're not even at 1 trillion. And of course, investment money or value does not only come from currencies. It's actually coming from the stock market also, and from real estate. And these markets are like also hundreds of trillions each, and even from the bond market, hundreds of trillions of each. You basically have a pool of value of assets of not 100 trillion but 1,000 trillions that can flow into cryptocurrency. So you only need a few big players to basically screw up with the pattern of crypto and break the pattern and go into a new bull market. And this may be happening today. There's clear indication that it's not coming from retail investors, this pump. It's coming from a few big players. The question is, are these legit players? And is it real institutions that are really shifting capital towards crypto, or are they fake players? Is it the Tether gang? Because there is also, if you look at that chart here made by some Tony guy, like since the bottom here, since the corona bottom of about 100 billion, the crypto market cap went up to now 500 billion. So times 5. But if you look at just Bitcoin here, this is just Bitcoin, went from about 4K to now about 18K. So that's times 12, 16, times 4, 4x. But if you look at Tether, like right now, Tether is, if you look at this total crypto market cap, like 530 billion, how much is coming from Tether? Because that's included in the market cap. And Tether is just exploding. The amount of Tether in circulation is exploding. We're now at 18 billion. So from that 500 billion, about 20 billion is Tether. Huh? And how did that happen? Well, it just happened the past 2 months, basically, because it was at 5 billion, and in 2 months it went up to 18 billion, so also times 4. And what do they do with all this created Tether? They just buy Bitcoin with it, not even other coins. But this could all be fake money. It likely is fake money, huh? And so the question is, what will they do with their Bitcoin? Will they dump it again or not? If we look at the fear and greed levels, they are extreme again. We are at extreme greed, 94. Huh? When did we get these readings in the past? Only once. The past, since February 2018, the past 2 years and a half, since this index is being recorded, we only had one time a reading like this above 80, above 90. And that was in June 2019. If you remember, June 2019 was when we were here, June 2019. Yeah. So the greed was extremely higher also, and I also said at the time it's very unlikely that we go into a new bull market here. It's much more likely that we will correct and go to the green line, the lower band, which in the end we did. Took some time though, but it was the same pattern, very high fear, greed levels, and also they are having fun here. Mike is playing, and also Felista. Huh? Yeah. Yeah. So yeah, I'm also concerned with the NVT ratio. NVT ratio shows the amount of transactions that you have on the Bitcoin network, and typically at the start of a bull market like this one here, you see that it's a low valuation here. That means there are a high number of transactions compared to the value of Bitcoin on the network. That's very good. That's a good foundation to have a new bull market. If you have lots of transactions compared to the value, that means it's being used. Same here. Before it exploded in valuation, you saw that the amount of transactions went up compared to the value, and that means, yeah, this is woo bull likes to make things a little bit more difficult. He inverted this chart, and so when it's a low reading, that means that actually it's good. The low reading here is good. It is a low NVT ratio here, and that means that you can go into a new bull market. But when you have a high reading, that's usually during top valuations. Here also, high reading means during top valuations. High reading means during top valuations. And what do we have today? High reading or low reading? High reading. And top valuations. That's not good. You should have a low reading, and then you're ready for a bull market. A low reading here, a low reading, then you're ready for it to take off. There is no low reading at all here. That means the amount of transactions compared to the value of Bitcoin is low. There's also hype in the market. Clearly, if you take Bitcoin in YouTube, you will see all kind of very bullish videos. But also, there is no yes, there is hype, but it's more like in the crypto world, because if you look at the broader market, nobody is busy with crypto. They are all busy still with the corona crisis. If you look at the searches about Bitcoin, it's low. Yeah, there's a little bump here with the price, but it's nothing like when you have a real bubble. Then you see this creeping up. And it comes from very low valuations. Not really seeing that. Could very well be like here, like just a temporary high reading, and we go down. So if you looked at all my previous analysis, patterns of the past are likely to continue. It can be broken, but you need to have some strong evidence here, and I don't see it. Yes, there is institutional demand, but it's likely manipulated. Um, so that's not enough to break a pattern. It's not likely. So I would stick to my predictions or estimations that yes, we still have a high probability, higher than 50%. So let's say 55, that we go back to serious undervaluation, meaning we just hit the green line, and right now that would be around 200 billion. We would go back to 200 billion. It can go fast, of course. Here you see how fast that went in only a couple of weeks. Can go fast, but it can also take quite some time. Like here, it took like actually 2 months to go back to the green line. It was more of a sideways movement. That's not possible here anymore. But 200 billion, 250 billion is still likely to hit. And we're at 540, so that's cut by more than cut by 2. And so what kind of, if you have a 55% chance to basically go back to about 200 billion, what should your allocation be, given that the upwards potential is high? And I also changed that, and thank you for correcting me. Some people pointed out that this was wrong. I had only 5 or 400% overvaluation for the next for this cycle, but that was a wrong reading of mine. That's true. So I changed it to 1000% overvaluation that we will see again. Of course, the question is then, where is the trend line standing then? Because now we're at 450 billion. It's only in a couple of years to be expected. 2 years more of waiting to get the peak valuation. But okay, I do think it's correct that I have underestimated the top valuation, and I think the top valuation will not be around 2.5 trillion, but double as high, that it will be 5 trillion by that time. That will be the top valuation. So the reason why is, let me show you. So what I said is that before, how I got to the 3 trillion or 2.5 trillion top valuation is that whenever you extrapolate the trend line at the bottom of the bear market, you get the top valuation of the next cycle. As you can see on this thread here in Bitcoin Talk, he shows that very clearly. So when you have the bottom of the bear market and you extrapolate this, the logarithmic regression, what does it mean? Does it mean these are future prices, future average prices like they were in the past? No. It means, if you then see the rest, what happened means that it's a top valuation. It's not even being hit. Okay, so when you do that in the next cycle, here you have again this cycle played out. You have the bottom of the bear. You extrapolate the line. That will give you an idea what's the top valuation in the next cycle. Indeed, the next cycle, when it happened and fully played out, we indeed saw that that was the top valuation. And it came a little bit closer, which I didn't notice before. And that means that if we do the same again today, at the bottom of the bear, we extrapolate. Well, he didn't do that here because that's the bottom of the bear. He went a little bit further. But basically, if you take into account extrapolating, like the cycles take longer and longer, so you take that the peak will be around 2023. What is the top valuation here? If you do the reading, it's actually not 80 billion. For this is just Bitcoin. It's actually not 8,000, but more like 60,000 per BTC. That's according to this analyst, which he also says like, we can only be in 2024 at 100,000. Well, I think it will be a little bit early, actually 1 year earlier, the peak of the cycle. So that will be 2023 at the start of the year, or at the end of 2022, I think, as the peak of the cycle. But how high can you go then? Well, only to 60,000. And actually, that means that you're going to hit it. And I think that's fair, because we indeed creeped higher and higher against to that line. In the beginning, it's not even close that it's being hit. The first cycle extrapolating, the second cycle extrapolating actually get closer. So it's only fair to say, okay, the third cycle, we will not go very close. We will hit it and maybe go a little bit above it. And if you do that, then you get like, if you do that for the total market cap, let me show that. So here you have the total market cap, but at the bottom of the bear. And where does the line go to by 2023? It's halfway between 1 and 10 trillion, but it's logarithmic, and halfway means it's only 3 trillion. But if indeed this time you go a little bit above it, then you could say it's going to be 5 trillion. So if I fill in 5 trillion instead of 2.5, double as much, and then I deduct like, okay, we will go to 1,000% overvaluation. That's fair, because indeed in the previous cycles, here then we went to 2,000, we went to 1,400, we went to 1,200 overvaluation to the trend line. So if we the next bubble we go to 1,000% overvaluation. Hello, Mister. How are you? Hi. Here's my Kia. Hi, Phil. How is it going, my love? Well. 1,000% overvaluation. Then we get the trend line should be at 500 billion then, which is indeed. Mikey, no, I'm recording a video now. Yeah. So yeah, a reasonable estimate. So that means if we stick to the same estimations of market share for these coins, then indeed we can get 80k for Bitcoin Core, we can get 7k for Ethereum, and 20k for Bitcoin Cash. So if this is the upward potential, how much should you be allocating today, given that you have a 55% chance to actually go back to 200 billion before you go to these higher valuations? Well, Kelly says 40% allocation today, which is what I have, a little bit more. But if you don't have any crypto yet, yes, that's a fair allocation to do today, 40% allocation. But of course, yes, it means it will likely go back to 200 billion. But if the potential is 5 trillion, and it's actually a 45% chance that you go to 5 trillion and you never hit the 200 billion, because there's a 45% chance still here. Yeah, you should allocate about 40%. So if you haven't done that yet, you can do that. But if you did that already in the past, you have more than 40% today, you don't have to do anything. And if you have considerably higher allocation, it depends on your investment strategy. But I would not really recommend to sell. It depends. But my investment strategy is to buy and hold and not sell anything until we go into serious overvaluation. And even if that means that my exposure becomes much higher than the recommended allocation, I don't sell it. So that's my strategy. So yeah, that's it. Very beautiful chart here. I think it's important to keep things simple in life. You look at this chart, it's very clear to see that, yeah, it's likely we go back to the green line. Yeah, sure, we can go into a new bubble, but there are many other indicators that shows that that's not likely. The NVT ratio shows this. The manipulation in the market with Tether shows this. The fear and greed levels show this, though we don't have the history of the previous bull market, so you do have to be careful with that. But the NVT ratio does go back to all cycles and shows that the reading is too high to be ready for a new bull market. So it's just probabilities. Nothing is certain, but I think it is very wise to invest according to probabilities, because yeah, the biggest loss maker is FOMO, fear of missing out, and buying high, and then also fear when the markets collapse and selling low. And you really have to be careful to not fall for both of these traps, as the market does always. The market does exactly that. They buy high, sell low. But in order to do the inverse, buy low, sell high, it's not easy. It's very difficult. Your emotions are your worst enemy here. And today you have clearly in the market FOMO. So yeah, Bitcoin pumped a lot, still has a very high market share, like 64%. So if we are indeed in a new bull market here, what should happen is that the other coins start to pump a lot, and then Bitcoin dominance goes down. Um, but of course, if this is a trap, which I think it is, similar to the gold market, the gold market went just above the all-time high of 2,000 or $1,900 per ounce. It went just above it, and then people get suckered in, and then it goes back below it, which is, I think, very likely gold will correct a lot and is still in a long-term bear market. But it seems to me the same is happening with Bitcoin. They're pushing it up to a higher to crucial points, triggers such as the all-time high, and I think, yeah, they're manipulating it above that price, and then to sucker in a lot of money and dump hard on them. I think that's what's going on here. How can you protect yourself? I think, yeah, that's the story. I don't have much else to add. Well, how can you protect yourself? It's what I do. Invest in different things. Yeah, so this is my portfolio. I am 40% in crypto, but like, yeah, I mean, crypto will likely correct, but that's not the case for air tankers. Tankers is a depressed market. There is no euphoria there. That's not so likely to correct, even if we would get a second corona wave, which is not likely, but we would get more economic shutdowns and collapsing demand again for oil. Well, oil tanks may actually go up. Airlines, yeah, battered industry. Like, yeah, I do think, like, most likely, actually, the stock market will continue to go up on a wall of worry, whereas crypto will correct. And in that case, airlines have been battered. These budget airlines, I believe, are great investments. This one, Norwegian, is on the verge of bankruptcy, but these budget airlines, like Spirit Airlines in the US, all likely will gain lots of market share, will do very well, and are still at relative low valuations. Another great investment. Zillow, I would say this is my poorest pick, even though it's a great tech company. In the long, of course, tech has been hyped already a lot, so maybe that's not my best pick here. Um, uh, I would, if there's one thing I would recommend not to copy of my portfolio, is Zillow, and wait for a correction. But short gold, great investment, I believe. Very few people do that. And short bonds, I've been building out a lot now. Also a great investment. Look at my Twitter. Why? Also been investing in Trump bets on FTX. You have two of them: Trump Stay and Trump Fab, and yeah, only 1% allocation. But yeah, the payoff is like you can fivefold your money if Trump stays president. And if Joe Biden becomes president or anyone else, then you lose your money. But a 5x, given the odds here, I do think it's seriously underestimated by the market. The chance that Trump stays president is much higher, I think, than the market is estimating here. So another great investment. And some will not work out, but that's okay. Only a few, or only even one, needs to really work out and do a 10x, 5x, or a 10x, and that will already be a great performance for my portfolio. And I'm using leverage now also, but in a smart way, not by borrowing at 5% from my broker, but by shorting some great shorts. And that's not crypto. I was considering shorting some stocks, so shorting some crypto, like I think Bitcoin, BTC is seriously overvalued, given the bad fundamentals, especially compared to Ethereum and BCH. I was considering shorting crypto, but that's not wise, because crypto is a long-term bull market. And indeed, Ponzi should never be underestimated. They can go much higher than your imagination can even imagine. Um, so long-term bull markets, I don't want to short anything there. I was also shorting shortly, like these electric EV stocks that copying Tesla, like Workhorse, Nikolai, Neo. But I just did some look back at it, and yeah, I mean, yeah, Nikola has collapsed since then, like good by maybe 40%, but then Neo has doubled since then. Yeah, I was wrong about that. You have Workhorse, I didn't check that. But it's just dangerous to short in a bull market. It's just odds are not really in your favor, even though you have lots of scams and poor offerings in a bull market, of course, always. It's still dangerous to short them because they can continue to go up a lot longer than you expect. It's much wiser to only short in a long-term bear market, which is for me clearly the case with gold. It's in a long-term bear market, and also bonds that have gone up for 50 years and are likely at a turning point here and will have a very long-term bear market. Huh? So that's wise to short, but I wouldn't short anything else. Thanks for watching the video, guys. Have a great Sunday. Yeah, the leverage, I mean, is because when you short, you borrow basically shares. So it's a loan. So that's leverage right there. I have a short. And so if you look at my broker, this is all with my broker. I have tankers there, I have airlines there, I have tech stocks there, and also I have these short positions, and also have some cash there. So this is my total long exposure, my total short exposure. My total exposure is 140, but the amount of capital I have from that hard with my broker is only 50% of my portfolio is with my broker. But I have an exposure of 140%, some long, some short. But that means that I have a leverage of almost three. I'm investing with 3 times as much money as I have money with my broker. And that's, of course, can create very good, very high returns if I'm right. If most of these positions are profit makers, then I will make lots of money because I'm investing with 3 times as much as I have with my broker. Usually that's highly recommended not to do, but this is actually a very diversified portfolio. Like, I can be wrong about certain things, like, yeah, I mean, value stocks may continue to be battered and tankers may do nothing, but then tech stocks may go up a lot, continue to go up a lot. I will have some returns here. Um, if tech stocks go up a lot, well, likely gold will go down. They don't go down, up together. Um, like some of these assets are inversely correlated also. I think that it is quite diversified, while these investments all have a good chance to make money. But yeah, so that's my story. I hope you enjoyed it, guys, and it inspires you to improve your own portfolio. That's the most important thing, to have a better portfolio that has a higher chance to make you money.